Bereaved families paid a record-breaking £8.2 billion in inheritance tax last year, ahead of Labour's death duty raid on pensions. The receipts, paid between April 2024 and March 2025, marked a £750 million increase on last year's record high, according to data published on Wednesday by HM Revenue and Customs, HMRC. Death tax revenues are rising due to frozen tax thresholds introduced under the Tories and rising property prices. The £325,000 nil rate band, which was set in 2009, would be £510, 9211 today, if it had risen with inflation. Before going forward to the important update regarding record-breaking inheritance tax haul, please subscribe my channel for important financial news and tax-related matters. Rachel Reeves announced in her inaugural budget last October that pensions would be subject to inheritance tax from April 2027. The Chancellor also dramatically cut inheritance tax reliefs for farms and businesses, in a move which farmers have said will force them to sell land and equipment to meet heavy death duties. Previously totally exempt from the tax, farmers passing on land to younger generations will pay 20% of anything above £1 million from next April. Kemi Badenoch, the Conservative leader, vowed on Tuesday to reverse the immoral and cruel raid on family farms, saying, "I have promised that the minute Conservatives get into government, if Labour do not reverse this, we will." The Office for Budget Responsibility expects that 9.7% of estates will pay inheritance tax by 2029-2030 as a result of Mrs. Reeves' changes, up from 4% currently. Inheritance tax is levied at a rate of 40% on all assets above a £325,000 threshold, known as the nil rate band. This rate will not change until 2030, after Mrs. Reeves extended a tax bands freeze introduced by the former Conservative Chancellor Jeremy Hunt in 2022. The allowance increases by £175,000 when a main residence is left to direct descendants, such as children or grandchildren. Any gifts made more than 7 years before death are exempt from inheritance tax. Mortgage brokers have said that they are seeing clients give their children larger deposits for homes ahead of the changes, in order to shelter wealth within the family. In April 2009, the average house price was £143,567, according to the Land Registry. As of February this year, the average price was £268,319, much closer to the £325,000 allowance. But experts warned that the Chancellor could be eyeing up further changes as a result of the financial turbulence caused by Donald Trump's tariffs. Ian Dyall, head of estate planning at wealth management firm Evelyn Partners, said, "Extended financial market turmoil and a possible recession could hit tax revenues and borrowing costs for the government, in which case Treasury minds will wander towards further areas that can be tapped to shore up the public finances." So the Chancellor might not be done with inheritance tax reform quite yet. The recent financial market turbulence will, however, have hit the value of some estates in the short term, especially those that are heavily invested in the stock market. One silver lining of this for some families could be an inheritance tax rebate. Laura Hayward, tax partner at accountancy firm S&W, said, "Speculation is rife that the Chancellor will need to look again at increasing taxes at the autumn budget and could consider making further changes to inheritance tax. Some worry there is potential for the 7-year gifting rule to be scrapped or lengthened. This backdrop of uncertainty provides added urgency for families.